Hello everyone, Jesse Webb, Traders Pro. Market conditions remaining bullish in a bull market. We're seeing this overall uptrend extend and continue to extend. We'll have some additional news, I believe, today. We'll see if that ends up moving markets currently. A couple of concerning things we'll talk about here in this overall uptrend. Not necessarily overly concerning, but just due for a pause, due for a pullback. We've seen this breakout now on S&P 500 and continuing to move higher. We've got this particular setup right here, looking for ideally we get a little bit more of a spike back up in volume, but we're towards the upper end of that range. Buy-sell ratio is starting to weaken, and we're seeing the momentum indicator moving back up a little bit here towards, but not extreme. We've got extreme on both breadth and sentiment here as well. So we're definitely at a range where we could start to see some pullback here. We've just got so much strength in this overall uptrend. We're just not seeing any pullback quite yet. We are seeing the buy-sell ratio, though, continue to dip back down to 2.3 from 3.2 yesterday. So keep a close eye on that. This range, when we're here and we're this wide in terms of the buy-sell ratio, and they start to come back together again, that is what we're looking for a possible trend reversal, or at least a pause of the current trend. So these are early indications that this trend is pausing and starting to slow. Whether or not it's just a counter trend retracement or whether it's a full reversal is always yet to be determined. But these are areas to not expect insane upside from here without some kind of a pause or a counter trend. So we'll keep a close eye on that. We haven't really seen that yet in an overall trend crack or break. It's still solidly to the upside, and so we just want to start preparing for an area where we could get some reversal right here. S&P 500, let's take a look at that. Over the last year, we're solidly up in that momentum zone on S&P 500 and breaking out of the last high, those August highs. So this 457 range on any kind of a pullback is going to be significant to see if we can hold this area. If we do get a retracement and things start to pull back, but we hold this area of support and then we can continue to the upside, that really will be the next test that we want to be watching for, is if we can continue to hold these support areas. You can just see how strong this trend has been, and similar in magnitude and duration to this most recent trend that we had back in the early summer. Here and here looking very similar, and really nice strong patterns. Once they get a little bit extreme, they just are not sustainable without some kind of a retracement counter trend to be able to catch its breath and then build for more upside from here. The overall sectors still looking real strong here. We're seeing technology ranking the highest and continue to do well, where energy is ranking the worst. And we know that, obviously, we know that oil has been continuing to move lower, and that is running in that $63 base range, where we talked about this massive base right here and just a lot of support with price activity historically over in these ranges. That $63 range could potentially start to slow this downtrend on oil, and it's extreme to the downside as well. So if you're that kind of an investor trader where you're looking for contrarian type reversal locations, oil is starting to fall into that camp where it's just had a really sharp downtrend. It's running into some support. It's oversold and could start to find some demand right here and start a new uptrend. That's again not yet. It hasn't proven that. It's just proven it's solidly down. But this location, this range of trend, is going to start to create some support areas for USO. Let's take a quick look at bonds. The 20-year TLT. If we look at that overall price trend, we've talked about this. It's running into that 50% retracement of the downtrend. So this snap tool is grabbing the current trend on the current time frame, which is 1 year. It's got this high and this low. It'll automatically find the high and the low on the chart and then connect to those locations and then draw our zones automatically. So on the downside, we still have momentum zone to the downside, and then we run into these counter trend corrective zones. 50% is a very common location for a counter trend retracement to happen. So we're running into some resistance there. We'll see if bonds move higher or lower based on any information that's coming out today. I think it's Fed minutes. It's coming out. I'll have to double check on that. But running into some resistance here where we could see a little bit more of a retracement, at least testing that 92 level on TLT. We'll see if we end up running into that over the next few days. That's where it should hold up. We should see bonds holding up right here at that $92 level. We've got lots of price points here for that to hold up, for it to become a support zone, a demand zone at these areas. We'll see on TLT. Let's take a look at some muscle stocks. The top one on the list here has been it was a buyout. So it actually had a pretty large gap right here all the way up into this range. So we're gonna pull some of those in just because a lot of times it's obviously in a new uptrend and it's got a new buy signal, but it's gone too extreme and it was up 50%. And like I said, I believe it was a buyout. So when you ever see these, you see a big gap like that, just double check, maybe go in here and check some news items to see if it was a buyout or if it was typically you either see three things. You either see a buyout if it's a big gap like that, an insanely good earnings report, or an FDA type of approval, some news item that the stock has been waiting on. So in this case, just do a quick glance, double check it was a buyout. So that price is not going to move from here. If it's a buyout, then it'll just sit right there. And then after a little while, whatever the company was that bought this ticker symbol will go away and the new symbol will replace it. So you can just bypass those and ignore those if you ever see something like that. The next one on the group here on the list is Arlo, ARLO. Nice pattern. Early, it hasn't quite bumped up into that momentum zone yet, but working on it. Let's see if we had any volume. Nothing like the past trend that was here, but an interesting price pattern on ARLO. CABA, this is an extremely volatile stock and certainly use some caution. It's a Biomed stock. It had a massive sell-off and then immediately recovered. So lots of interest right here, but potentially a lot of manipulation happening inside of whatever this price activity is. Those are always, these are always a little bit higher, not necessarily higher risk, but they certainly add a new dimension of volatility because there's so much uncertainty that comes around medical or biotech stocks or pharma stocks or drug stocks or anything that has some kind of pending type of product that's waiting on a news item. For example, there's another one. This stock, big massive run up. Again, you'd have to go look to see if that was some kind of a news item that propelled that stock higher. Just massive run here, but nice consolidation for that overall pattern on that stock as well. DUOL, nice confirmation breakout on huge volume here as well. This is here's the volume bar, big spike on volume and good confirmation day. This is the 1 year time frame, and we've got up in this upper momentum zone. So markets are still strong, still looking really good right here. You're going to have pockets of stocks that are continuing to do really well, but we're just extreme to the upside, which we want to be a little bit cautious of at this time. That'll do it for today's update. If you don't have full access to the software, you can sign up with the link below, and we look forward to having you. Have a fantastic day today.